It's been 4 days since Nigeria's central bank raised its policy rate to 14% by 200 basis points. That's a record in history of the central banking. But let's get across to see how this is pacing out. The market has been really topsy-turvy since that. The stock market went up for 2 sessions, took a bit of a beating yesterday. Today is the final trading day, and we're looking at the markets. At the currencies market, the Naira found a new low level to be more precise, due to the latest hike in monetary policy rate by the financial regulator. At the fixed income market, bonds remain a little bit sluggish, but bills or treasury bills are a little bit bearish. This is the first trading week after. When we return on Monday, we'll see how things are pacing out at the marketplace. But let's return to the story on South Africa. Let's return to Southern Africa, where the unemployment rate is dipping slightly to about 26.6% of the labor force in the second quarter of the year, from a record 26.7% in the first quarter. In the quarterly labor force survey, which polls households, Statistics South Africa says this amounted to 5.63 million people without jobs in the second quarter, compared to 5.7 million people previously. The expanded definition of unemployment, which includes people who have stopped looking for work, ticked up to 36.4% in second quarter. That's from 36.3% in the first 3 months of the current year. Africa's most advanced economy is teetering on the brink of recession after contracting 1.2% in the first quarter, as manufacturing and mining sectors shrunk rapidly. Let's try and get a sense of today's market for about a minute. Let's get across to Lekan Olabisi, who is a fixed income and FX dealer at GT Bank, one of Nigeria's tier 1 commercial bank. Lekan, thank you very much for coming through on the phone. We appreciate your time.
Yeah, good afternoon.
Bring us up to speed where we were as far as the FX market of things are since Tuesday, when the central bank raised interest rate 200 basis points to 14%.
Yeah, the FX market has been, really steady. We've seen rates around 320 levels. I think we got to highs of 334 during the week, but right now we're at 320 levels.
Does that mean that at the interbank spot market, FX market, the Naira is making some gentle recovery as we head to the end of the week?
Well, what we've seen is, market is a bit stable. We've seen a lot of reaction to demand and supply. There's still a lot of demand out there, but at least the Naira is just it's fairly better against the dollar right now.
Yes, when interest rates go up or goes down, the yield on government bonds is usually the first destination. Where have we been in the last 4 sessions?
Yeah, well, right now what we've seen on the yield side is the government has, there was a home auction today. We saw it close around 18%. I think government has been trying to use the yields to attract the offshore investors. And on the T-bill side, we've seen yields rise, across the yield curve all week. Right now, we are 18% on the long end of the curve. For the bond side, all maturities are above 15% right now.
Well, so where do we place liquidity in the financial system within this entire currency, bills and bonds conversation? Leko.
Yeah, well, the market is liquidity. The market is buoyant enough. Yesterday we opened over 400 billion long. We had some maturities coming in yesterday, over 150 billion maturing from the T-bills. Then we also had FAC inflows earlier in the week. So the financial market, money market is quite liquid right now.
Okay, let's hang it in there with those liquidity. Do enjoy your weekend. We intend to have one here from all of us here at Channels Television. We thank you very much, Lekan Olabisi from GT Bank, for winning on that conversation. Do have a great weekend, everyone. I'll see you at the other side. Bye for now.